Let's pick up on the markets now. The JSE may benefit from positive global markets this morning. This is due to data that shows expectations for inflation are moderating. Now, the markets continue to price that the worst is over for the U.S. bond markets and that the end of the Fed rate hikes will occur sooner than expected as the economies in the U.S. and elsewhere slow sharply in the second half of the year 2022. Lesedi Mabuza is from Sentio Capital, an equity analyst there. She joins us to unpack some of the market moves. Lesedi, good morning to you and welcome to Newsfeed AM. First time we speak to you on this show. Give us your sense of how the JSE has opened this morning after ending firmer on Friday.
Good morning, Polly. Just looking at the JSE this morning, you are seeing it definitely greener and higher this morning. And this is also on the back of trading and closing higher on Friday. And all of this is due to markets being less concerned about inflation. I mean, you are seeing some sort of positive news from the US where that shows some kind of indication that inflation is kind of peaking, although we are not sure yet. And the market is just definitely moving on that. You're seeing the JSE up, well, the J All shares currently up 1.2%, and as well as the top 40 up 1.4%. And most of this is due to your commodities that are trading really well, as well as Naspers, which is a big stock in the index that is trading much higher this morning.
Yeah, let's talk about something that is weighing not just on South Africans, but on trade as well. The wage protests at Eskom. Will these add to the debt woes, and how much of an impact will that have on economic growth?
Well, I think first and foremost, you are going to see a big impact on our economy. I mean, we do need electricity to perform basic economic activities, for stores to trade, for everything to trade. So I do think it is going to hamper our GDP number for the quarter, definitely. And this is also, it's not so good because this time last year we did have some lockdowns during June, and we were expecting a rebound for the quarter. So this will definitely hamper that recovery in our economy. But in terms of the debt, I think with the whole wages, it definitely does add to the cost, as the employees are obviously striking for higher wages. Therefore, you are going to have a general increase in the cost of operating Eskom, which further leads to more money in the end. Yeah. So it definitely is not a good story.
Not a good story to tell at all. With the conversation I've just had with this spokesperson, I've got to tell you, it doesn't inspire much confidence. There's no telling when this strike is going to end. Let's move on to company news. Naspers publishing its annual results announcement for the year, which ended on the 31st of March 2022. How have they fared in their overall performance?
Overall, I'll say it was a positive result. I mean, you saw revenue increasing by 24%. And this was mostly led by the e-commerce division, which is a large division of the group, which increased 49%. But just looking at the overall divisions, you saw general operations trading really well. But then looking into your headline earnings, you saw headline earnings declining 40%. And I would say this mainly reflects the group's ongoing investment into that e-commerce division, or e-commerce portfolio, as they try to grow it and create more sustainable growth for the company going forward. Yeah. But the lower headline earnings also reflects impacts from regulation in regulations in China last year due to regulations in Tintins mostly. I mean, you saw a regulation passed in China where children weren't allowed to game for a certain amount of hours in a day. And that obviously impacted Tintins' revenues and operations, which led to slower growth in the period. Yeah. But just looking forward, the CEO does plan to invest more money in the e-commerce business, create a more sustainable and normalized growth, which is a positive thing. Even looking at the share price is up about 15%, which is really good results.
Let's conclude the conversation with PPC Cement, which also posted its financial statements for the year, which ended on the 31st of March 2022. How are their numbers looking?
Overall, I would say it was a decent result. I mean, so PPC is a big cement and materials seller, and they have operations in South Africa, Botswana, and internationally being some African countries. You saw revenue increasing by 11%, which I think is a decent result, especially coming from where they came last year. I mean, well, the past 2 years we saw during COVID, people were in their homes, people were building DIY, people were building homes in the rurals, and you saw a big spike in cement sales and general construction companies during that time, where people had more disposable income due to less spending on entertainment, travel, and so forth. So currently with cement sales, you are seeing a normalization in those volumes. I think compared to pre-COVID levels in these results, you saw cement volumes up about 5 to 9%. So you are definitely seeing a normalization in those operations. But just to talk to the headline earnings per share, the group did generate a headline earnings loss of about 3 cents. And this is due to costs increasing higher than what they expected. You saw, especially from one of the operations in Zimbabwe, the cost increased by about 85%, which is a big number, which led to total cost increasing by 19%, which is definitely way higher than the income that they generated. So I would say it's a decent result, but those cost pressures are coming through.
Lesedi Mabuza, thank you very much for that markets update. She is an equity analyst at Sentio Capital.